sterling.
Now we're joined by Rod North, the Executive Director of investor relations company Bourse Communications. Now, welcome to News Breakfast, Rod.
Good morning.
Good morning.
Now, I know it's time, the clock is ticking, time hasn't run out, but it appears that there's already been plenty of damage done to the US, at least anyway.
Well, certainly this uncertainty of not knowing when the deal is going to be struck in relation to the $14 trillion refinancing doesn't help financial markets around the world, and in particular Australia reacted quite unfavourably yesterday. We saw our market drop 1.5% after having a good week last week of rising 3%. So it needs to be resolved fairly quickly, and of course it's really coming to the wire now, and it'll be very interesting to see what President Obama has to say when he addresses the nation. But it just shows you how, I think, difficult the situation is, where you've got a whole lot of factors mitigating, in particular, you know, with both parties in the US, you know, wanting to get the best deal out of this, and in particular, you know, the Democrats obviously wanting to be in a position where, knowing there's an election looming in 2012, they really want to push the refinancing through as far as they can, perhaps into 2013. So it's not sort of going to come back up as an issue sooner than perhaps they would like it.
Now, Australian markets have also been roiled by the events overseas, but local investors are also very keenly watching today a speech by the RBA Governor Glenn Stevens.
Yes, they certainly are, and of course we had the minutes out from the last RBA meeting last week, which pretty much indicated that, you know, based on a whole lot of factors, you know, that surrounded really where we are from an economic point of view, that it was unlikely that rates would be moving at this particular stage. But of course the big number that we're waiting on for tomorrow is the inflation figure, and it'll be interesting to see whether Glenn Stevens, the RBA Governor, mentions anything about that today. I think they'll be waiting to see what that figure will come out at.
What do you think?
Well, I think the market's generally expecting that there'll be an increase of 0.7. If it's higher than that, that would be of a concern for interest rates, perhaps monetary policy to move upwards. If it's lower than 0.7, it could possibly mean that rates could come down. So there's a very high level of expectation, you know, looking at that inflation number. And then, of course, we've got, you know, one of the key things, which is the GDP to come, you know, August for 1st of September, when that figure comes out as well.
Now, everybody makes interest rate predictions, of course, but you made a particularly special one back in June.
Yes, I did, and I think there was a bit of a surprising, because I feel that there's still lots of issues, you know, with the economy, and we're seeing lots of signs, and we've seen a lot of economic data out recently. Last week with business confidence, you know, of course, we're still seeing enormous retail woes. People are very concerned, but the big issue is there's something like $500 billion sitting in bank accounts. People are just not spending money, so the economy needs to be stimulated, and I think the last thing the market really needs is another increase at this particular point in time.
And you said that back in June, and I think from memory Virginia and I both shook our heads at the sheer prospect, but that goes to show how quickly economic events can change.
Absolutely, things can change very quickly, and you know, we really want the economy to get back on the mend and get people spending again, really, and getting growth happening and jobs and employment, because at the end of the day, you know, that's really what it's all about.
But it should be heading that direction. Won't a 0.7% figure help if that's what inflation ends up being? Compared to the last quarter, it was 1.6%, wasn't it?
1.1. What it really puts the inflation rate at is 3.3% for the annual rate, but it would put the underlying rate at 2.5, you know, if we have a 0.7% increase, which is actually acceptable, because that's in that band that the RBA is happy to see it sit between 2 and 3%. You really start to get concerned if the underlying rate moves, you know, towards 3 or above 3. So we're in pretty good territory, and I think there's some optimism that figure tomorrow will be quite a good one.
All right, we'll have to leave it there. It's changing week by week and probably minute by minute. Rod North, thank you very much.
Keep our fingers crossed.
Absolutely.
Okay.
Thanks very much for that.
Thank you.